So we knew just the man to talk to about this. Please welcome into the show, David Nelson. David, I said I can't take credit for that line, but they tried to out BS our BLS, and I thought that was pretty good.
You know, it's pretty tough for us here in the United States because a lot of the data gets revised. Just a couple of months ago, we had a jobs number, for the year previous, revised by 818,000. That's a pretty big number. And what happens, whether it's the United States or China, the news cycle passes. And when they come out with the revision, it's kind of like a newspaper when they put that revision on that correction on page 26. That's kind of what's going on here. And for me, China, I look at these numbers, those numbers you just read, I don't know whether to put a plus or minus sign in front of them.
Right. And, that's a problem, though, because I just said before we came onto this show on our Market Day report, China is such a big customer. It's the world's biggest customer. And if your business plan relies a lot on China, you might need to rethink some things here in the near future. And I've been to some events where I've been speaking, and I've been around other speakers, and some of them like to talk about what's going to be happening with our economy. And they're not looking for China to kind of take that reign back anytime soon. They're actually waiting for India to take over. What do you think?
I think that's likely to happen. Certainly, Apple got that message. They have opened up in India because I think they see the handwriting on the wall. Look, capitalism, for whatever it was in China, it was a hybrid form of capitalism. That's dead. That's gone. And what's replaced it is a top-down, government-controlled economy that increasingly is losing support from the rest of the world. And Scott, let's get this straight. China is not a competitor. If the administration is saying they're a competitor, they're not. This is the enemy. And the escalation around the Taiwan Straits, that's a direct threat to the U.S. economy. Some of our most sensitive advanced semiconductor production takes place on that island. So I think of them as an adversary in every sense of the word, economically, foreign policy, and someday soon militarily.
And with retail trade, China's a pretty crowded trade with the U.S. retail, which I don't like. And I've had some, we've had some people on this show, some very, very smart people, but they privately tell me they won't touch China with a 10-foot pole. They don't have any investment in it at all. And I think that that's probably the better way to do things, but they don't really, yell that from the rooftops. But when I see those types of individuals, those types of investors say that they're not going to touch it, I don't think that that's something that we should ignore.
I don't, and you saw that massive pop in Chinese stocks on the heels of an announced stimulus package. And I actually bought into that, and I've rethought that position. I think increasingly the world is pulling back from China, and companies have been burned, like you said. You're forced to partner with a Chinese company. They rip off the intellectual property. And like I said, I think the world is retrenching from China. Certainly the United States and China, our economies are decoupling at this point. So it's very, very tough to invest there. Maybe some smart money can make money. David Tepper's been in there big. But when will he reverse that trade? I'm not sure. And for the moment, I'm not there.
Yeah, JP Morgan as well. And to your point, when Hong Kong was part of the British Empire, really was a British outpost, and they had to deal with China, and it finally went in the late 90s, it was returned. Hong Kong was returned to China. It had a GDP on its own of about double-digit GDP, 10, 11, 12%, up there. But you fast forward to 2020, early 2020s, and that's sub 2% now. That's what communism does to a thriving capital market, which it used to be. Now, some people want to think it still is, but I think that's a great minor example of what they can do to something that was really once very good and now is more in line with what they're doing as a country as a whole.
This was going to be the largest economy on the planet. Clearly, they were going to surpass the United States. And now that may shift over to India. And you can see increasingly investment is being made in that country and capital is being pulled out. So as long as President Xi is in charge there and we're in that form of, communist takeover of just about every industry in the country, I suspect capital will continue to retrench. And who's going to want to put their capital there?